Have you seen what's happening in China? It's massive, and it could be the spark that ignites the entire silver market. We've been talking about a silver squeeze for years, but this might be the moment it goes from theory to reality. China, one of the biggest players in the global economy, and they just made a move that screams they're worried about their silver supply. They've quietly implemented emergency restrictions on silver, and if you're a silver investor, or even thinking about becoming one, you need to hear this. So, what exactly did they do? The Shanghai Gold Exchange, which is the main hub for precious metals trading in China, has just hiked the margin requirements for its silver forward contracts. They've also widened the daily trading limits. This will take effect after settlement on December 30th. Now, if that sounds like a bunch of financial jargon, let me break it down for you. Imagine you're driving on a highway. Hiking margin requirements is like demanding you have a full tank of gas and a spare tire before you can even get on the road. It makes it more expensive and harder for people to trade. Widening the trading limits is like removing the speed limit, allowing for massive price swings in a single day. Why would they do this? Simple. They're trying to cool down a red-hot market. For weeks, we've seen a huge disconnect between the silver price in London and New York versus the price in Shanghai. Silver in China has been trading at a massive premium, sometimes 10, 15, even 20% higher than the rest of the world. This premium, known as arbitrage, is basically free money for anyone who can buy silver cheap in the West and sell it for a huge profit in the East. This isn't just normal market fluctuation. This is a sign of a physical shortage. Chinese investors and industrial users are scrambling to get their hands on physical silver, and they're willing to pay way over the international spot price to get it. The demand is so intense that the official exchanges are starting to panic. They see the inventory on the Shanghai Futures Exchange, another key player, getting drained at an alarming rate. We're talking about stockpiles being cut in half in just a few months. It's a classic supply and demand squeeze, but on a national scale. So the authorities stepped in. By making it harder and riskier to trade, they're trying to scare off speculators and reduce the trading volume. They're essentially trying to put a lid on a boiling pot. But here's the thing about a physical squeeze. You can't solve it with paper market tricks. All this does is signal to the rest of the world that China has a real silver problem. They are short on physical metal, and they are getting desperate. This is a massive signal. For years, the silver price has been, let's say, heavily managed by paper contracts on exchanges like the COMEX. Many believe the true price of physical silver has been suppressed, but you can't print physical silver. When a major industrial and investment powerhouse like China starts running low, the paper games begin to fall apart. The demand from their solar industry alone is astronomical. China is installing solar panels at a record pace, and every single one of them needs silver. Add to that their electronics manufacturing, electric vehicles, and a growing middle class looking for a safe haven asset, and you have a perfect storm for a demand explosion. What we're seeing is China effectively trying to ring-fence its domestic silver supply. They're making it more attractive for silver to flow into China and much less attractive for it to leave. The emergency restrictions are a defensive move. They blinked. They've shown their hand. They're admitting through their actions that they can't meet the surging demand from their own stockpiles. Think about what this means for the global market. The world's silver supply is already incredibly tight. Mining output has been flat for years. Above-ground stockpiles are at multi-decade lows. And now the world's second-largest economy is effectively sucking up every available ounce it can find and is willing to pay a huge premium to do so. This isn't just a ripple, it's a tidal wave in the making. This premium in Shanghai is a beacon for every silver producer and bullion dealer in the world. Why sell your silver in London for the spot price when you can ship it to China and get 15% more? This will inevitably lead to a massive drain of physical silver from Western vaults, like those in London and at the COMEX in New York. As those stockpiles dwindle, the paper price manipulation becomes harder and harder to maintain. At some point, the dam will break. This isn't just about China. This is a global story. It's about the collision between finite physical supply and infinite paper promises. The events in Shanghai are the most significant evidence we have seen to date that the physical market is finally overwhelming the paper market. When a government as powerful as China has to resort to emergency measures to control its silver market, you know the situation is serious. They are trying to prevent a full-blown default on their exchange, where they simply run out of metal to deliver. So, what's the takeaway for you, the individual investor? This is a flashing green light. It validates the entire thesis for holding physical silver. It's not just an inflation hedge or a safe haven anymore. It is a critical industrial commodity facing a historic supply crunch. The smart money is watching this closely. The arbitrage trade is pulling metal from west to east, and these new restrictions are China's desperate attempt to manage the fallout. But you can't manage a shortage with new rules. You can only solve it with more supply, which doesn't exist, or with a much, much higher price to destroy demand. And that's where we're heading. The price discovery is shifting from the paper markets of the West to the physical markets of the East. China's actions are a confirmation that the silver squeeze is no longer a conspiracy theory. It's happening right now, in real time. Don't be surprised if we see other countries follow suit. As the global scramble for physical silver intensifies, a form of resource nationalism could take hold. Everyone will want to secure their own supply. This is a game of musical chairs, and the music is starting to slow down. The emergency measures in China are proof that one of the biggest players is worried they won't have a chair when the music stops. Keep your eyes on the vault numbers in London and New York. As they continue to fall, the real fireworks will begin. This is a developing story, and it's one of the most exciting setups I've ever seen in the precious metals market. Thanks for watching. If you found this information valuable, make sure to like this video and subscribe to the Silver Thesis for more updates. We'll be tracking this situation closely as it unfolds. Stay prepared and remember to always do your own research.